what I want to do here is I pretty much just want to, I want to go back and back test. This won't take long, okay? Inside of the scope of this week and last week, okay, there was 3 separate days that we traded, made money, and, obviously did well. And first day was right here, Monday. Okay, we were able to capitalize on an obvious short setup. Tuesday, severely manipulated. Thursday, literally just, or did I say Thursday here? Wednesday, severely manipulated. And then we hit into Thursday, and we were all there. We sat through that, and it just slammed straight to the downside. Didn't really give much opportunity in terms of like a retracement, and then obviously looking to capitalize on that. And then we enter Friday. And it's funny that, you look at these days on the hourly chart, right? And you see Friday here, and it really doesn't look like much is going on. But really, we were able to catch 2 setups going in both directions on this Friday, November 1st here. Okay, so we had a selling opportunity and a long. Okay, so with that said, we're going to go back into Monday here. Okay, and look, I want you guys to understand. We're going to backtest every single trade that we took live on stream within the last 2 weeks, okay, which is 3 trading days. And we all were able to, anyone and everyone that sat here did the same exact thing that I did, preserved their capital when it was necessary and took their shots when it was necessary. Okay, playing that perfect balance of assertiveness and patience, right? We were able to obviously make a lot of money through this and not lose money where a lot of people were, okay? We look at Monday here, okay, and what was taking place prior to this Monday here? Why was I inclined to take a trade that wasn't like some huge trade, right? Well, we're entering Monday here, right? What were we doing? Moving sideways, okay? So all the previous days in here, all we did was consolidate, move back and forth, and just down, up, so on and so forth. And then we enter Monday. Okay, not only are we entering a Monday, but we're in the middle of a long-winded, if it loads for me, consolidation. Okay, coming into here. So what am I going to expect? I'm going to expect Monday to work both sides of the range and not be so much of trending. So with that idea in mind, I scale down and I'm like, okay, here's the 15-minute chart. What do we do? Here's that midnight opening. Okay, we're going to extend that forward. Okay, what I'm doing here by showing you guys all the setups that we took in the past 2 weeks is showing you the familiarities you're going to find in all these setups. Okay, number one, first and foremost, what were we doing? Okay, it was a short selling setup. Now, what led into us shorting right here down in the new week opening gap and the sell side here on a scalping basis? Well, prior to that, we had midnight opening. What are the clear indicators that a sell-off should ensue? Well, price opens here at midnight here. Offers are above the midnight opening price here. Drops down once again. Back above midnight opening, clearing buy side liquidity right here. Okay, so we have a run on buy side liquidity. We're offering price several times above the midnight opening. When I'm seeing us do this, the more times we stack above and offer price above the midnight opening, the larger the move to the downside we're going to have. Okay, so when I see this, every time we trade above the midnight opening, smart money is accumulating shorts above that midnight opening to distribute them to the downside. Distribute them where? Well, obviously down in the new week opening gap. Notice that as soon as we reach new week opening gap, we stall. Sideways, 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 right? So what's happening here is the first element we look for in price, okay, is most times you want to look for 930 opening, okay, as a Judas swing. But in this case, 930 open, all it did was set the stage for us to capitalize on this continuation here. Okay, on a traditional day, we look for 930 opening. We want to find that opening, look for it to trade above that opening, short above that 930 opening, and obviously get covered to the downside. In this case here, we had a high impact news driver, so we're just going to be simply using this 830 opening here. So in every single setup here, you're going to find the same stuff. All right, this 930 opening, sorry, the 830 opening, okay, price trades up above it here. That's our Judas swing on the day. Trades up, fails to take out this high. Why do we not need this high taken out? Because it's already done the work up here, took out buy side liquidity here, and we continuously offer price above midnight opening. Same thing here. 830 opening, trades above the opening to do what? Accumulate short positions, trades up into this up close candle here. That's a bearish order block. Okay, accumulates those orders, slams to the downside. Okay, almost gets the new week opening gap, but doesn't even get it. Just touches it there, works the whole way back up. Okay, what's happening here? Sell stops are getting jammed below this low right here. Okay, so whenever it rises up here into this Fourier gap, right, this 15-minute gap, now we're going to look for a shorting opportunity above that midnight, or sorry, excuse me, the 8:30 opening. All right, so we scale down. Remember, okay, what I'm trying to show you guys is the elements that I look for to take a trade. We have a run on buy stops, check. We have a run above, opposing where we're going to be looking to take our trade. So we have a opposite move above the opening, okay, where we're expecting lower pricing. Okay, so with that, we do scale down, okay. And let's go over here. And the next thing I look for is what is market structure looking like? Okay, well, if I look at it here, price trades up, creates a swing high here, lower swing high to the left, lower swing high to the right. That's an intermittent term high. But now it's taking place. This price trades down, slams up, fails to take out that intermittent term high. If we're bearish, we do not want an intermittent term high to be broken. Okay, and if it is, we need some type of SMT divergence. All right, but in this case, fails to get up there, and now it's taking place. Well, create a swing high here. Is there a lower swing high to the left? Yes, there is. Trades down. Do we have a lower swing high to the right? Right here, yes, we do. So we now have an intermittent term high with another intermittent term high below it. So along with the liquidity run that set the stage for the sell-off here and that opposing run above the opening, okay, our Judah swing, we also have bearish market structure showing its hand. Okay, so these are the main elements that I look for prior to taking a trade, okay? Now, the last thing is, are we delivering off of a key level? Well, I already showed you that 15-minute gap, but we're going to use the 5-minute here, okay? So prior to taking the short, what did we do? We're delivering out of this significant Fourier gap right here, okay? So literally what I'm doing here, guys, okay, whether you want to hear it or not, okay, I know most of you just want, or, some people just want entries, but what I'm showing you guys is literally what I look for prior to taking a trade. And like, this isn't some like hindsight teaching, right? It's literally stuff that I'm doing live with you guys and taking real entries and making real money, right? Anyway, now what do we have? Well, price returns above that 8:30 opening, trades into a key level. This is where we look to short. Okay, but on a Monday, granted, I have to give it a little bit more room to, really show me its hand. So now the final piece of the puzzle here on this Monday is displacement. Okay? Displacement. Oh, first runner. Yes, good question. So there is a breaker right here as well, but I mean, that's really irrelevant. Like, it's, just pick one array. You don't really need both, but, technically, yes, we have a high, low, run on the internal highs here, trades down. This right here, these two down close candles would make up the breaker. You can extend that out. You can use both. Yeah, that's fine. But in this case, I'm just going to be using this gap here because I just need a delivery into one key, a higher time frame array. Okay, but anyway, on to the last element that I need now is just a simple displacement because guess what? Okay, we know where price is going to be drawing to with all this stuff in play, right? We know that we have the new week opening gap hovering below here, and we know that we have sell side liquidity resting below this low here. Okay, because there's sell side liquidity here. It's going to be our previous hour low. So we're entering 10:42 a.m. right here. And here's 9:53 low. This is the low of the 9 a.m. hour. Okay, so this is our previous hour low, sell side liquidity. Okay, and then we have fair value resting below it with this new week opening gap. Okay, like I said, the last thing that we need is displacement. What's taking place? Well, once again, we have a run on buy side liquidity here, delivering into that array, returning above that 8:30 opening to reaccumulate shorts, and then we have ourselves a displacement. Well, if we zoom in for a second, where did we enter? Well, if you really zoom in, okay, there's a very small volume imbalance right there. Okay, and there's also a breaker right here. So as soon as we look at this, we now finally have a displacement out of the 8:30 to return to 8:30 opening and the 5-minute imbalance /15. And then we have a displacement. Here's that volume imbalance that it trades up into. Boom, snaps up off of that. And then what does this next candle do? Trades up, touches the very high end of the breaker there. Okay. And then off the races down. This is where we shorted. This is where we're able to make our money on the week for this Monday. And that's it. So now what we're going to do is we're going to fast forward. And guess what? We made ourselves money on this day, but we kept that money, preserved it all the way into, if you bear with me for a second here, all the way into this Friday right here. So here's Monday. Okay, this is where we made our money. And all through this, okay, Tuesday, all day was pin higher, higher low, higher low, higher low, not interested. Okay, Tuesday, severely manipulated and was consolidating, and the real sell-off didn't even take place towards, market close, right? So that was a capital preservation day for me. Okay, Thursday, once again, okay, just slams down, like literally no resistance whatsoever. Minimal retracements. Okay, so another capital preservation day. Now, granted, it's not like this every single week, right? A lot of times we're going to be trading, more days in this too. But, when it comes down to it, whatever your bank account statement's saying, it's not dependent on how many days you're trading. It's how you conduct yourself through uncertainty, and it's also how you conduct yourself through whenever you find your model. Okay. With that said, we're now going to come into Friday here. Okay. What's the sentiment here on Friday? Okay, always start from the higher time frame, right? Just like we do with Monday. What's the sentiment here on Friday? Well, guess what? We trade down below here, and we take a significant pool of sell-side liquidity. And then we enter Friday. Okay, I understand that the majority of the week has sold off, right? I understand that. And we also took a key pool of liquidity. So there is a great chance for, once again, just like Monday, Friday to work back up into that range of Thursdays because it's very, very inefficient. Number one, and also not particularly probably not be all that much trending, and that's kind of what we got here. Okay, so number one, okay, what's taking place here? Let's get onto the 15-minute time frame. Okay, so similar to Monday's trading, guess what we're looking at? Well, we enter here. Here's our midnight opening. Okay, this right here was trade number one. Okay, we were able to short this, get capitalized down to this 15-minute imbalance. So once again, okay, just like Monday, immediately I have to identify first and foremost, what is the market drawing towards, okay? Where is it likely to draw to next? Well, this right here, coupled with what I'm going to show us in the lower time frame, is what we're looking at. This 15-minute imbalance left behind after a very large premium was priced in intraday. Okay, so what's taking place? Midnight opening. We're severely extended beyond midnight opening. Okay, and this only matters when we reach this key premium array. So that leads into what we were looking at on Monday. Okay, you want to see price be above midnight opening, so the highest probability shorts are going to be above the midnight opening. Okay, and we're also going to be tapping into and need to be utilizing a higher time frame key level. And then we take our Fibonacci tool. Okay, when I say premium, this is what I'm looking at. Here's equilibrium. Above that, this very large fair value gap. So we're delivering out of that large fair value gap. Okay, now we're going to scale down to the 5-minute chart. These MacBooks, man, oh man. Okay, 5-minute chart. And actually, scratch the 5-minute chart. I'm gonna go into the 1-minute because I'm now remembering that we didn't really utilize the 5-minute like that. So the 1-minute from the 15 down to the 1-minute is all we needed. But anyway, looking at it here. Okay, coupled with this significant fair value gap here. Okay, let me show you. Okay, we have an inefficiency. We know that the market only draws to inefficiency or liquidity. Okay, and one of two things here was the liquidity with the the inefficiency with the very large 15-minute fair value gap. Coupled with that, we now have trailed and jammed sell stops resting below here. So not only do we have inefficiency, we have liquidity. Okay, and why is that taking place? Like I told you, we're severely extended beyond not only the midnight opening. Okay, back here, if I can find it. There we go, right here. Okay, but we're also severely extended beyond that 9:30 opening. So without an indicator, that tells me we're overbought, especially whenever we're leaving behind a very large gap like this and all the sell side, internal sell side liquidity like this. So what's taking place here? Higher low, higher low, higher low, higher low, higher low. And in every single live stream that I teach you guys, like this is just inevitably upset, because once we deliver into that higher time frame key array, okay, and we're entering the later portion of the New York session. So one thing that I did exclude with Monday, which I should have, is time of day. Well, guess what? It's 10:30 a.m. Typically, 70% of the time, if you're going to have a New York correction, I should say, okay, inside of the New York session kill zone, which is 8:30 to 11 a.m., most times it's going to come from 10:30 to 11:10 a.m. Okay, so a lot of times you'll see it wait for that classic 1050 macro, okay, but a lot of times you'll also see it reverse right at 10:30. Okay, it all depends on, time and price. Are we delivering into a higher time frame level? That type of stuff. So time aligns. We know what price is drawing towards. We have a higher time frame key level delivered into. We know the sentiment on the daily time frame. Now all we need is displacement. Okay. Looking at it here, do we have an intermediate term high formed fractally? Okay, because granted, there wasn't a lot of time for market structure to be set up, so it kind of excludes from the setup. It's not a requirement; it's just helpful. Okay, but in this case here, we have a run on a short-term high, creates a swing high, lower swing high to the left, lower swing high to the right, and then we have displacement. Boom, market structure shift, but more importantly, a change of the steady delivery, and then we revert right up into these two up close candles. Me, as well as many other people that were obviously watching me live, got the memo, shorted this. Okay, we're getting covered down in the sell side liquidity and then the upper quadrant of the 15-minute inefficiency. So boom, there's Friday's trade. Well, guess what? Right after this short, we understood that this thing was obviously still bullish, but it just needed a correction and it needed to bump out some stops. And if we take our Fibonacci tool, okay, so I'm not taking it the whole way down here. We're always using the second leg within the price swing, okay? So from this short-term low up to the high that was formed, we're now pricing in an optimal trend entry at 79%. Okay, now I will say with that opening price, okay, this is a bit of an exception, okay, because we're not trading down below an opening, okay, and what do I tell you guys? A lot of times you're going to want to see price trade below that opening, okay, because your highest probability longs are going to come below the opening. Now, here's the interesting part. Similar to how we use 8:30 openings, we're using the same thing for 10 a.m. openings, and we had a 10 a.m. news driver here today. So taking that 10 a.m. news driver opening out here. Wait a minute. What's going on? Okay. I'm hoping I'm breaking this down to you guys in a very proper way because, like, literally every single setup that we take has so much similar stuff. Now, looking at it here, this market is obviously exceedingly bullish on a Friday. Okay, it's going to keep pinning higher. We look at it here. We had that correction. We've taken sell side liquidity. Okay, every single trade I need is a run on liquidity and then obviously target opposing. We have that. We took liquidity. We've efficiently delivered this 15-minute gap. We priced in a short-term discount and we're trading below an opening. Okay, what do we trade below this opening for? To accumulate more long positions, okay? And now what's taking place here, and what gets interesting was we're entering the 1050 to 1110 macro. Okay, we've had that early correction in the New York session, okay? We trade off. The market's been bullish. All it's been doing is pinning higher, and then we create this high right here. What's going to take place? A lot of people are going to try and pick tops early, put their stop loss above here, buy stops specifically, and this is where we're going to look to target next. So we're entering the 11 a.m. hour. Okay, at the time of this displacement, and here's the previous hour high at 10:31 a.m. Okay, so we're going to be targeting previous hour high. That's our draw. And then deeper into that large, very large 15-minute gap. Okay, so understanding that's a very, very shallow run. Okay, very, very shallow run, this huge 15-minute gap. Okay, we'd expecting, a little bit more of a dive up into there. Okay, and that's what we got there. So we delivered the sell stops, we delivered the 15-minute bounce. We're entering a macro, and macro does what? Targets any liquidity that is yet to be ran. Okay, and we've already run sell side liquidity here. We're being respecting of this intermediate term low. We're unable to take this down here, okay, because we trade down, swing low here, higher swing low to the right, delivering everything bounce. It's a rebalancing intermediate term low. We don't even get near that. And with us respecting that bullish market structure, we now create an intermediate term low here, swing low. Okay, stuff's getting familiar here, isn't it? Higher swing low to the left and a higher swing low to the right. What's the missing piece of this puzzle here now? With every single setup that we take, it's the same stuff. Displacement. Well, guess what? We get that right here. Boom. Creates a Fibonacci gap. All right. Trades down to do it here. Buying opportunity number one. Notice I said number one. This here technically would be a more risky entry. Okay, but obviously I wasn't shying away from that. But we know where the draw on liquidity is, and that's going to be above previous hour high, right? So we delivered down in this gap here. That's opportunity number one. Well, if you missed that, guess what? The market had its saving grace, and honestly, I didn't expect it to offer this second entry, but it did. Trades up, matches this high here, and then trades away. So we're now creating and generating relatively equal highs. So this becomes even more obvious that it's going to be ran out. So we drop down. Okay, what did I show you guys real time? Where was my entry? Right here. Create this breaker. Okay. Low, high, lower low, running sell side liquidity, trades up. This here is a failed order block, now works as a breaker. Trades down into that. There's your second buying opportunity. And you get covered above the highs. Okay, very, very simple. So, all 3 setups I just showed you here was everything that we took and made all of our money out. Literally 3 setups that we took through the week. That's it. That's all we took. Okay, and that's all that's needed to make a lot of money, and you guys know that. Now, moving on. Okay, now we get into some good stuff here as well. Let's see what time it is. 1:55. So we got time here. Okay. Now, last but certainly not least. Okay. This here was obviously the trade that we took yesterday. And I'm actually going to flip to good old ES here because this is where we took the trade. I like the market structure better on it. What's the sentiment here on the daily chart? Remember, we're always starting at the higher time frame, every single setup. Well, obviously, we're exceedingly bullish. I mean, this thing is insanely bullish. I'm not going to be the try that jumps in front of the train and tries to catch a reversal. What I do instead is whenever the market is obviously bullish, okay, it's not bearish anytime soon at least, right? Okay, what I do is I wait into that New York session and I wait for that short-term liquidity to be ran. Okay, so once we enter 9:30 to 11 a.m., okay, first of all, I'm going to find that 9:30 opening. Okay, that's right here. Okay, what was I showing you guys in every other setup? We're looking to take a long position, so what are we going to wait for? We're going to wait for manipulation below the opening. Do we get that here? Well, if you give me a second here, I will explain. Here's that 9:30 opening. We open. Okay, first of all, before we even open, we're generating obvious relative equal highs. Okay, in an exceedingly bullish market, we're generating these. What's everyone going to want to do? Try and pick some type of top, right? And they're going to feel comfortable and safe with their highs above here. This thing's overworked. Okay, but they don't understand. They don't understand the power of this election here. Okay, so they're going to keep ripping this thing higher, manipulating it higher as long as they want to. Okay. So with that said, what I wait for to capitalize and get in tune with the overwhelming bullish order flows, I wait for a run on liquidity. Okay? Every other setup, what am I looking for first and foremost? Well, if I'm looking to take longs, I look for sell side liquidity to be ran. Well, that took place here. Traded down below the trailed stops here. Okay, sell side liquidity internally. And we're trading below a 9:30 opening. There's our classic Judah swing. So we have that perfect, beautiful, and we have an opposing target right here. Easy. So let's go on to the 5-minute chart. Next, what we look for is, okay, we now have a swing low formed. Let's get onto the 1-minute chart because 5 minutes not needed now that I'm looking at it. Okay, what's taking place? Excuse me, bear with this MacBook here. it's like so sensitive on this touchpad. Now, heading down to the 1-minute chart where we executed on this live, right? What is taking place? We're entering a macro after that classic Judah swing right here below the opening. Okay, so we have an oversold condition intraday on a short-term basis where it's lulling traders in to get short. Okay, the fake out, if you will. And this is where we look at a capitalized long. Okay, so the main draw we were looking for intraday was this 9:30 opening range high. Okay, we're still able to get, respectable profits even though it didn't reach the whole thing. But that's obviously outside the scope of what I'm trying to teach here. Now, next. Market structure. What's market structure looking like? Well, obviously, I can't really make a case for this being bearish market structure because all it's showing up here is relative equal highs, and I see that as a target, not market structure, okay? Intraday, we drop down, create a swing low here, higher swing low to the left, higher swing low to the right. There's an intermittent term low fractally formed. Now, I only care about these 1-minute intermittent term lows formed in market structure intraday if time is significant. Well, obviously time is significant here because we're within a macro. So within a macro, which makes us more powerful, we have an intermittent term fractally formed on the 1-minute chart. Now that that's cemented, okay, respecting this breaker here, now what are we looking for? Well, we already had one displacement leg here, okay, letting things become a little bit more, set in their ways, high probability, price drops down, okay, and then we have a second expansion leg higher, boom, trades down to the middle of the inversion gap, trades down to these down close candles right here. Order block, buy it, aim for 9:30 open range high. Okay, so um, yeah, I literally just went over and overviewed every single setup that we took live on stream within the last 2 weeks. You guys saw the business with that and the withdrawals that were able to be obtained. Uh, with that, quick shout out to 762. He was able to obtain losing sight of my words here. He was able to obtain 4 funded accounts just on the one singular trade that we took on Monday. Okay, so um, just kind of puts things in perspective here with these last 2 weeks, the run I had. Just kind of puts in perspective of it's not about what I say really holds weight because I'm out here proving the stuff that I'm saying, which is you don't need to take a lot of trades to make a lot of money, and you don't need to trade every single day. You don't need to do more than you think that you need to. Okay, simplicity at its core will always win out for anyone that's trying to chase after every single price fluctuation. Okay, so now that we got that out of the way, got the boring stuff out of the way. Hopefully you guys are all awake still.